Ladies and gentlemen of the crypto space, we're live on Monday, December 11th at 11:30 a.m. Look at that red, minus 6%, minus 7%, minus 8%. You're late, very late. How late is very late? Well, fortunately, we have a capacity to look at charts and data to tell us where we are, why we are where we are, and how we got to where we are. So we don't have to necessarily beat ourselves saying we're a decade late, but we're certainly late even from a what's going on right now cycle perspective. We'll inspect Bitcoin today, and we could even avoid altcoins to some degree from a late perspective because volatility is certainly going to be exacerbated in the altcoin space. But our nice baseline is a Bitcoin and the all important macro perspective because it has not resolved. There is no resolution from a macro perspective. There's nothing that's saying, oh, things are great, things are horrible. And we'll bring that into perspective to give us a sense of what it means to be late and what it means for what is inevitable, what is destiny. Let's pop it over to the main screen and take a peek and see what I mean. So you are late because Bitcoin had a 52,000% run between 2012 and 2014. You are late because Bitcoin had a 12,000% run between 2015 and 2017, end of 2017. You are late because Bitcoin had a 1,681% run between 2020 and the leading up to the end of 2022. So fascinatingly, we can observe these cycles, the particular quantity of years in these cycles. We could clearly see the diminishing returns, and that is a very popular argument. What will break the diminishing returns? Will the diminishing returns break? Will the next cycle not produce 1,600% returns? There's no way to give an answer to that. You only don't know that from a hindsight perspective. There's plenty of arguments why diminishing returns will be broken and we'll see a higher rate of return for the coming cycle. There's also plenty of arguments why the diminishing returns will continue. And you should expect less, significantly less than 1,600% returns. Now, bear in mind these particular troughs to peak are from a 3-month perspective, so it was much higher than 1,600% if you look at it on a monthly perspective or certainly a weekly perspective. It was a good 20x, 2,000%. He went from about 3,000 at Pico bottom in 2020 to about 70,000 at Pico top. But the edges, the margins, the lower time frame data will drive you nuts. And that's why we talk about rules. And these rules are designed to simplify the way we inspect markets, to filter out the noise, to have a modus operandi, a methodology of engaging with these markets that are increasingly sustainable. And the biggest way to engage with markets sustainably is to understand that the hardest thing of engaging with markets is entry, when to acquire something. And then another important inspection are things at a premium or a discount. And that's important from being late. So being late does not automatically say you cannot acquire something. It means you're at a disadvantage because it certainly means someone acquired it earlier than you, cheaper than you, which means they're going to be able to sell for a profit, maybe literally just because you bought. Have you ever noticed when you buy an altcoin, there's at least maybe persons that have done as such with less experience. I've done things like this historically, where you buy an altcoin and it literally goes down immediately after you buy it. Now, oftentimes that's a coincidence, but mathematically it's not necessarily a coincidence. You're purchasing it raised the price of it, which caused at least one person that bought before you to say, I'm going to sell because I raised the price for them. So they're literally taking my capital, my liquidity. And engaging with markets like that will drive you nuts. That's why we developed the methodologies to be more sustainable. So, where are we and how late are you? If we take off everything, no, not that, that. And I even would want to get rid of the SMAs. So, Bitcoin price is currently 41,681. Time weighted average price is currently 31,285. Bitcoin price could drop to 31,000 from 41,000, a $10,000 drop, and that's the average price. That would be a fair price for Bitcoin. $10,000 less than where it is. So if you purchased Bitcoin at a price greater than $31,285, you have purchased Bitcoin at a premium, not a discount. Now it gets even worse if you go out to the 6 month, but you have to draw a line in the sand at some point. And, not many people get to buy Bitcoin at the 6 month time weighted average price, $19,165. Few, very few, because it's there for such a brief period of time on the 6 month candles back in January of H1 2020. It was $3,839 now. It was a little less if you go short term. The wick was down at around 3,000, a little less than the 6 month average price. But back in end of 22, Pico bottom on Bitcoin was around 15,700, significantly less than the current average price. And now where are we? Current price compared to the average price. It's a significant premium. So Bitcoin could sell to 18,000 and change, and that's the fair price from a 6 month perspective. So markets are at a premium. Bitcoin is one particular asset, albeit a very meaningful asset because of its proof of work mining, censorship resistance, difficulty to change. That's what that means. And that's meaningful in all regards from a money perspective, with regard to what Bitcoin offers as compared to sovereign money, nation-state money. So this is all meaningful, but that doesn't mean it's the end-all, be-all with regard to things to look at with regard to where to allocate capital. That's the biggest issue that folks, especially new entrants, encounter when engaging with markets. They try and force a narrative. Obviously, you don't really define a narrative. It takes a lot to be able to define a narrative. A narrative meaning why you're going to engage with a particular asset. I got to own Bitcoin. You don't have to do anything. What you have to do is the right thing. And the right thing is not easy to identify. And you can't force the right thing. It has to be, a screaming opportunity, a remarkable discount, a mispricing of an asset. And Bitcoin Maximalists are very right that Bitcoin and other assets are very different. And it's a complexity with regard to regulators, so on and so forth. But I define the vast majority of crypto markets as enterprise, as business. It's not the same as other business. We don't have to get into the granularity of securities and whatnot. But these are businesses as analogous to banks, money transmitters, certainly, credit facilitators, and what jurisdiction are they in. It's a whole complicated conversation. But these are those types of enterprise. So these enterprise have characteristics of not really equity, governance, and it's not really shareholders' rights, because the concept of what is a shareholder is really in the story of an equity. So the point is, these assets can easily be mispriced. Can easily find assets that are at a discount rather than a premium based on inspection of the daily spot price of a particular asset, considering all the information we have on them from a price action standpoint, the way we look at this chart data, from on-chain data with regard to total deposits. How about revenue share, cash flow? How much are they paying people that own the asset, that are receiving what is comparable to a dividend? So that'd be like price to dividend ratio, if you want traditional finance terminology. There's price to earnings, certainly, in crypto markets. You can't force an asset, because the second you force a position, you're like, oh, you bought at a premium. Look at Ethereum, down 6%, down 4%. It's not waiting for dips. You'll drive yourself nuts with that thought. What you want is to buy at a discount, which does mean either waiting. I mean, Buffett was remarkable at waiting, is remarkable at waiting. Sitting with what? Almost $200 billion worth of cash? Waiting. Either you get the opportunity, either you get the discount, or you don't. So that's very complicated for me to try and tell that story, because I'm experienced in these markets for I don't even know how many years at this point. Point being, would you be willing to wait 2 years, 3 years to find something that you want to own at a discount? Now, bear in mind, the discount on Bitcoin may only come after a run to 150,000, then a crash to 55, to 60, to 70,000. The discount doesn't necessarily mean the price is lower than what it currently is. The discount, in many regards, means the price action is favorable not to go down from where you buy it from. You want it to go up after you buy it. You want it to pay you more after you buy it. So a discount doesn't necessarily even mean what people would typically say it is. A discount really means, is it going to go up from where you're going to buy it? Derek, hope you're doing well. Much appreciated. Much appreciated. I'm okay. It was a good weekend. Diego, hola Cap, buena tarde. ¿Qué horas son? 11:30, más o menos. Ok. Necesito comer. Tengo hambre. Ok. Continuamos. Cap, are you buying FXN? Am I late? Very late, Shisha. Very late to FXN. FXN was a discount at $14. See if I have yep, I got a fib retrace set up. Frankly, I'm sorry for folks that love it, and I really appreciate it. It's a significant protocol. I have grown very fond of the Aladdin ecosystem and what they're doing. They just have a tremendous amount of control and deposits and voting power. It's quite extraordinary. But it's retracing. This is a Head and Shoulders. It's not granular, but this isn't a Head and Shoulders type structure. It is below the whatever indicator, the SMMA that I got up. Some sort of average price. This is Gecko Terminal, so I don't have the granular, very precise indicators that are easier to talk about that I have on TradingView, but it's significant nonetheless, this SMMA. So this is a breach to the downside. This is a reversal. We're maybe going to hit a double bottom on a 618 golden fib. I don't know. But it's still at a significant premium, and it's just completing potentially a head and shoulders. So clearly, here's your neckline. This is a defensive position. Defensive. This is a position of weakness. So if you're really wanting an entry, I mean, even a full retrace to 0.236 is still at a significant premium. This thing was at $14, and a retrace like that was to $42. It got way ahead of itself. And structurally, technically, it could go significantly lower. And this has nothing to do with the value proposition. This has nothing to do with significance of the protocol and its capacity to provide value and infrastructure to the crypto space. It's just price action. Nothing hasn't been invalidated about its functionality. Its integration with Convex, who has sterilized an incredible amount of circulating supply, everything remains unchanged and the same in that regard. But technically, significantly cheaper prices could potentially be available. No, I am not interested in FXN. I do not need exposure to it. It is an LSD of Ethereum, and they're diversifying into stable coins. So I'm very interested in what they're doing, and I think the ultimate thing that could always be said is if you have just Ethereum, you are exposed to this entire narrative. This is a credit facility, and they're going to have a capacity to print dollar liabilities using pristine Ethereum mainnet collateral, which is Ethereum. It's not dollar collateral, so there is volatility in the collateral, which is significant as compared to talking about sovereign debt, dollar denominated debt creating dollar liabilities. So that's a whole macroeconomic conversation. But that is literally just Ethereum. If this does well, Ethereum does well, and vice versa. So, that brings us back to that conversation we have every now and then about excess diversification to a particular narrative. I mean, clearly you got to diversify a little bit. You can't just, if you have enough capital, you can just have Ethereum and just be exposed to all of this DeFi activity. But what kind of position size do you need for that to be practical and make sense? You need a very large position size, but clearly like 10 mil at 5%, or whatever you could get from, FXN's LSD or Frax's LSD. Let's say you get 5%. All right, that's pretty cool. At 10 million, making $500,000 a year. So that's a large position size. So you have to think differently when you have a smaller portfolio to deploy. So you do have to diversify into enterprise, cash flow positive enterprise, because technically Ethereum is cash flow, but it's not. You can outperform that rate of return. Anywho, FXN, high opinion. I had Cleaver up moments ago. Cleaver sits in between. Very high opinion of Cleaver. Generally speaking, my sentiment is I can't attain the position size I would want. I'm priced out, which is interesting because I have capital, but it just doesn't have the liquidity. There's only $669,000 worth of liquidity. I cannot acquire what I want. There's just not enough volume. I would need and it's not significant. What's interesting to me, I'm okay with like a 50%, 100% premium to be paid on an asset, and that is what I did with CTR, Concentrator. But there's just, it's such a low liquidity, and there's still emissions. So look at the market caps of the emission, the fully diluted. It didn't scream the most opportunity that I wanted, that I needed, and I'm very resistant to deploying capital. And that's pretty interesting because that's not something I would typically say like years ago, in years past, 2020 and 2016. I was freely deploy capital to shit that I didn't understand. I didn't have a methodology. I didn't have this rigorous narrative, this story to tell. But I did find Concentrator more favorable, particularly because it is fully diluted. There is no emissions. This fully diluted is not going up unless market cap goes up. The vast majority is locked, and it was $1 million market cap when I saw the price point that I was looking at. And there's $62+ million worth of deposits. You know the whole narrative. So this was interesting, and I had a capacity to acquire the position size that I found interesting. So that's the rationale and the thought processes that went through my mind in thinking about taking a position. Now, what are my expectations? Very low volume, so my expectations are not much. There's a big run up after I acquired my position. Full retrace, we're all the way down to, let's move it over, we're all the way down to the 382, and 0.5 is holding as resistance thus far. It's a bit no man's land with regard to price action, but this is within my expectations. My expectation is if it gets down to where I acquired it, the amount that I acquired, that's a significant restructuring of people that own the asset. And that might actually be an opportune time to acquire more. And I would contemplate buying more in the 70 cents, 80 cents region. Expectations, I don't think it gets there. It may. I clearly don't see invalidation of what I saw at a lower price point. Nothing has changed. Deposits are still ridiculously mispricing the assets. $63 million, 61. So some withdrawals. So nothing has invalidated my original observations. Is there opportunity? I don't see any immediate opportunity. I don't see like, oh, it's going to run up. It's very low volume, so there's no indication of immediate opportunity. And the last thing anyone should ever do is acquire something simply because I acquire it. Plenty of other assets. Tetranode loves his Prisma. He just wants to buy it. He just wants to own it. He doesn't give a shit about price. He's got a lot of capital, so he just wants to have the governance rights. He wants to control the emissions. I don't even think he gives a shit about vote rentals at all. He just wants to pad the portfolio and control. And that's interesting. If with enough capital, you can be a little bit profit agnostic or profit indifferent. You can afford to not give a shit about the revenue and just be like, I want the control. I want to buy the control. Some people buy companies and they have so much money just because they want to buy the damn company. So that's considerable. It's a fortunate position to be in. Still doing the same thing. I'm still doing the same thing with this position. It's just an LP position and it's free Prisma. My expectations remains to liquidate the LP position. Not necessarily at an opportune time, probably just based on decreases in APR. If the APR goes down to a certain threshold, I'm like, all right, I'm done. It's okay. So it is what it is. The amount of emissions that I'm able to accumulate, great. Fortunately, these emissions are never claimable. So it's a very tax-friendly emission, as I would define. I would not, if you have the 52-week lock set, it is quite arguable that you cannot claim the emission. So if anything, it's a deferred income of some kind, depending on the way you've structured an enterprise or a business or a trust or whatever. So that gets very interesting. So I find this very passive and comfortable to engage with, which is remarkable from an LP perspective. I don't engage in LP. Well, what kind of opportunities do you have in an LP perspective? Albeit, all things considered, Bunny V2 and Maverick and even Trader Joe's stuff, there may actually be some interesting LP activity. A couple 100%. is quite remarkable. It's just because the volatility and the favorable rates that the enhanced uh, protocol mechanics offer. There's a fair amount of revenue to be made from an LP perspective. So there may be opportunities there in the future, or it's just that I have not spent the time to find them thus far. So I think that story is actually changing from my perspective, because clearly historically I say I'm not interested in LPs. You really need size, but you might not need as much size as I historically talked about. So that could be an opportunity going forward that I will discuss again in the future in more favorable terms. Shisha says CTR versus FXN. What would you pick? When? When is the question. What size is another question. What are the expectations is the most important question. I hope that my last couple of talking points help. It's not about what to pick. It's much more than that. It's what to pick, why, when, size, expectations, so on and so forth. Portfolio composition, portfolio position size, so on and so forth. It's a whole construct. So nothing I could say could possibly help with that question. Sahil, hello. What were the reasons that led you to take a position in CTR? Could you share your position size and entry range? I hope the same thing. What I said earlier, clarify that a bit. The thing that screamed to me was the deposits versus the market cap. And also control at an SDCRV level. So you're talking about a market cap of $1 million at the time that has control over 11.7 million SDCRV. That's a lot. And Cleve is even more from a CVX perspective. 2+ million CVX is twice the size of what Tetranode controls. And it's a market cap of what? I mean, this is crazy. It's a market cap of $880,000 and it's controlling 2+ million CVX. That's a lot of voting power. And that's the same thing with Concentrator. The speculative aspect of it is that I'm not locking it as of yet, and I'm looking forward to what Aladdin does from a team perspective and a restructuring of tokenomics perspective across the ecosystem. So in that regard, I'm anticipating and will respond to the changes that occur accordingly. And I want to have that optionality to do different things. It was a very modest size position, so you got to be comfortable deploying small parts of the portfolio. Smaller portfolios need to deploy larger position sizes. There is a threshold to the portfolio size where you probably shouldn't even be entertaining these smaller cap assets. And that's from a rational portfolio manager's perspective. If you do a 10x on a portfolio, you're literally doing portfolio performance that is unheard of in traditional finance without taking on excessive risk with microcap companies and their debt loads and their subjectivity of the board is a significantly reduced risk profile dealing with literally Bitcoin and Ethereum. And that's probably where Bitcoin heads. Gut instinct, maybe 8-10x on a 3-month TWAP perspective. Ethereum at 10-20x. I mean, these are all diminishing returns. So this is probably, the few remaining years between now and 2030 where these kinds of multiples are even reasonable on those macro cap assets. The smaller caps, you don't know what happens. It's not as much risk as taking leverage and doing that kind of degeneracy, that kind of gambling. But there are plenty of things that can invalidate the viability of this as an investment. And so that it's very hard to deploy large percentages to microcap assets with a smaller portfolio. And that's like risk return, max risk, max reward, stuff like that. And that's just something I'm obligated to discourage. It's the only rational thing for me to do. Um, but that's my rationale. Hope that helps. Hope that helps. Diego, which SMA are you using on what? On Gecko Terminal? This thing called the SMMA. Where did I have it? I had it on Cleve. I'm not fond of that indicator. I'm not fond of these charts necessarily. I don't have the indicators that I want, but this time weighted average price on TradingView, I very much appreciate. I believe it's TWAP trend. So it's a very nice indicator, and it gives me the information I want to such a degree that it pierces through the moving averages. This is like a moving average, a moving average. It's the time weighted average price, and I really like this value from a macro perspective. At least what it offers me, the perspective on where things are right now compared to where they were and where they're likely going to be. So it's a very nice trend line for me. And look at this. We're having this conversation with Bitcoin down 4.68%. You can imagine conversations. I'm not on social media right now. I haven't looked through the stream. Oh, this is a pullback. Some people are like, oh, this is the bull market. And we still need a 10, 15, 20% pullback. And is it a bull market? It's still a bear market? All these stories and narratives, and literally looking at this one line tells a different story. Still buying at a premium. So a bull market implies what? Probably that it's going to go significantly higher in the future. There's plenty of catalyst for some shit to go down. So you're at a premium. The DXY is $18 to still put in a higher. If this closes green, that would be a pretty tough expectation to close at 106. So this is a period of uncertainty. If this closes anywhere below the close of last quarter's candle, it'd be like a hanging man, which you need first quarter of 2024 to indicate continuation to the downside or invalidation of this bearish quarter, end of Q4 2023, and continuation to the upside. But frankly, the last two quarters, H2 2023, is pretty indicative of trend reversal coming off Q3, Q4 2022. That's a hell of a top from a 3-month candle perspective. That is a full-on bearish engulfing. Now the problem is, what does that say? The world wants it to reverse, and they tried, and they did it for over a year. They were able to push the dollar down, and that's really the perspective to have. But now Japan still has complexities. How the hell are they going to raise rates? And then that's really the narrative that has pushed the yen up, is that they're going to try and raise rates marginally. They're not going to be able to get to the Fed funds rate. So how the hell are they going to invalidate the yen carry trade and draw capital back into Japan, external investments, international investments back into Japan, at least back into the yen, so they could stop selling it to buy their damn bonds? Jesus. So there's plenty of catalysts why, if you bought Bitcoin, Ethereum at a premium, it could go down, and it could go down significantly. 31,000. And it's still an uptrend. Just got it at a premium. So that's, as I say, it's the hardest thing in the world to do, to take positions. And it's a very different perspective what I'm offering, because I have these positions and I've had them for a long time. So that's the position you want to attain. You want to be a position holder. You want to be an owner. And you want to be telling the story of where we are relative to where you took your position. And that's a vantage point where you can make decisions. When you're trying to take a position, it's a different story. And you want to buy at a discount. You want the Buffett methodology. You want to buy something that's distressed, something that is mispriced, something that is deviated significantly to the downside from a moving average perspective. The moving average tells you not just a trend, it tells you the structure and shape of society and what they're doing at the macroeconomic and geopolitical level that causes this kind of price action year after year after year. And if they keep doing the things they're doing at a geopolitical level, you would expect, from an average price perspective, continuation in a similar directionality. So in that regard, you want to grab things at a discount. Now, then you also have to have the conversation, what would it take from a geopolitical perspective for such a massive structural change to occur that this trend line, this time-weighted average price, changes direction? Why would it change direction? And I'm not a fan of betting on the end of the world, because who the hell are you going to sell to if everything's over? So I'm a fan of acquiring assets, and that has been the narrative for the last 50 years, is you want to own things. You want to buy things. It means you have to make money. It means you have to work. You have to go to school and have to have a career so you can make money and to buy things. And then optimally, the things you buy pay you. And that's the whole real estate narrative that is ridiculous at this point. It's literally uninvestable at all. And that was the whole dividend investors narrative, which is completely uninvestable at all from an equities perspective. So this is literally the last bastion of opportunity for an old school dividend investor that I wanted to be probably in the 2012, 2015, 2017. And I didn't understand it like I do today, but you can't do that shit. It doesn't work. It doesn't work at 2, 3, 4, 5% when the federal government is paying you 5+% right now. You might as well buy bonds. The equities dividend space is invalidated. Anyway, I've told that story 1,000 times over. Hope that helps, Diego. Asarco, hey Cap, made alive. Late versus early is like bear versus bull. Well said. The time horizon is key. Time horizon is meaningful. So what's the ultimate position? You buy at a discount and you hold it until it's at a significant premium. You sell when shit is, this is an FX position. So I define Ethereum, Bitcoin, stablecoins as shit you got to rotate, you got to cycle because it's like a currency. Treat it like a currency, and people will have the arguments, Bitcoin a currency, is Ethereum a currency. The argument is irrelevant. What's pertinent is it's cyclical like a currency. You have capital flows to and from these markets, just like you do emerging markets or markets in general. That kind of conversation in traditional finance. So as the dollar strengthens, it has an effect on this market. As the dollar weakens, it has an effect on this market. And as it strengthens and weakens, you have different flows to and from these markets which affect the enterprise in these markets. So time horizon is meaningful. But look, if you bought Bitcoin at 70 grand and at the end of 21, yeah, you can have a long time horizon, but it's going to be pretty shitty until you literally have to wait years for that price point to come back. And that's like the old conversation about the S&P post 2008. Even .com, you could talk .com. Different world back then, different conversation to be had about why things were occurring back then. But look, if you bought at the top of 2008, it took you 2,100 days to get back to where you were. Now, fortunately, Bitcoin, you can have a large time horizon, and you'll get back to the price point where you were if you bought at a premium, but isn't it just better to learn emotions and buy at a discount and understand expectations? Because you do not expect 52,000% returns on your Bitcoin. Do not expect 25,000% returns on your Ethereum. It's not a reasonable expectation. So expectations are imperative to start to appreciate more and more. Hope that helps. Reserve name bear BSV at 50. Oh my God. Oh my God. Thanks for the insight, Noah. You're very welcome, BSV. Oh dear Lord. Well, the market was efficient and it priced it accordingly. Crypto J, good morning. Diego Prisma Dow just voted for implementing their revenue share. Very much. I have locked Prisma that I can't sell. It's worth nothing in that regard. I can't sell it for under any circumstance. Mathematically, I literally can't sell it. It's not just voluntarily. It's impossible to sell. The software won't let me do it. And it'd be very nice to get paid for it. So that's cool. I look forward to that. Hope that helps. Sir Joe, present. Killis, I am late. Good morning, everyone, on a sunny day. Windy out here right now, but it's always nice. Hope you're good. Athletic Concept, hey, Cap, D5 Futurist, good morning. Dan's in the house in the afternoon. Yes. Kazin, what's your take on Aura? Aura needs more recyclers. It has Jones, to my understanding, but it needs more. It's still relatively new. It came out, what, in 21? 22? This is KuCoin, for whatever reason I'm looking at it here. But it was came out during the bear, more or less, or at least at the very end of the bull. Now, they do a lot of mutations, a lot of governance, which is really good to see, and they pivot, and they work with Balancer. I have a high opinion of Balancer. I have a high opinion of Aura. From a price action standpoint, damn, they pay. And there's a lot of vote renters that pay a lot. So it pays much better than Convex. There's something that's more comforting about the amount of federation that exists for the Curve Convex protocols. So it's a little less comforting from an Aura perspective, but it is functional as all hell. It sure as hell printed a higher low compared to all-time low. And there's buy pressure above where it was. So that is a higher low. It's a slow-moving asset. Do not expect significant appreciation. This falls completely in the category of like a curve. If curve's $3 in 2027, I'm not going to be surprised. I don't have an expectation for appreciation at all. So it's the same thing. If this gets back to all-time high in 3 years, let's say it's $3 in 3 years, in 4 years. All right. It's not going to be like, oh, I'm disappointed. So there is a higher likelihood of it appreciating if there's more recycling and sterilization, if their federation grows, and that'd be nice to see. It's a very productive asset. Right now, as many folks on Discord ask me periodically, quite comfortable with it locked, and I see no reason to liquidate anytime soon. The only reason I have contemplated liquidating over the last 2 years is because maybe I needed the capital. And I don't foresee a reason to need the capital versus the income. I'm not in that kind of position, and I don't mind the relative underperformance of the principal. What I mind is being able to click a button every 2 weeks and receive income. Which has is tax friendly with regard to my taxable structure, and that means it fits well within what my expectations are. Generally, that's my Aura breakdown. Stargate is quite misunderstood. Pays over 10%. Let's say 10, just say 10%. Tilde 10%. It doesn't advertise it, but it's 10%. It's 10% in stablecoins too. Go figure. So that's cool. Small position for myself, but compared to Link, different story. Link is just global at this point. I mean, this is going to be monumental. Just make sure the expectations are correct. And everyone's expectations right now are completely speculative income. And that's cool because the speculative income potential is monumental. Things that make me hesitate, obviously, vested interest, peers. Can I take a position size that warrants taking the position? Can I have dominant ownership? Fuck no. It's a massive asset. Huge. So it's just that creates opportunity cost. I might as well deploy the capital to something where I can have a dominant position, can have a position size that I'm looking for, can have a rate of return that I'm looking for now rather than in the future. Less speculative, more quantitative. XYZ, paying 20%. And what's the likelihood of continue to pay 20% in the future? Okay, great. So that's not the characteristics that I find with that asset, and that's okay. Um, Very different narrative for Stargate, more DeFi centric, as we've seen. Link is not flawless with regard to DeFi, and it's not consumed very much at all from a CTCIP perspective and cross chain. Uh, does that change? Maybe. That's not the case right now. Right now, Stargate is much more effective for cross chain. And that's interesting. Now is interesting compared to maybes. It doesn't invalidate maybes, and that's the whole point of speculating how things may or may not change. But now is important. Don't neglect now. Hope that helps. Banks to blockchain. What's your take on Radiant's omni-chain lending and their DLP? Isn't that the overtones of tapioca? No interest. My allegiance is to the tapioca because I love dairy pudding snacks. And I know the team, and I have they've been. It's going to be the most sophisticated set of contracts that I could think of out of the entire crypto space. I mean, literally the entire crypto space. So while that does not really mean anything with regard to Radiant, I just don't have a capacity to speak to it effectively. Doesn't diminish anything about it, but I only speak to things that I really have a capacity to speak to. And my expectations are hopeful, speculatively hopeful with regard to tapioca. I myself have an early position in a seed round, and I'm looking forward to seeing what comes of it. I'm not an aper. I've maybe in 2020 engaged in behavior like that to a degree, but I don't really buy things the second they're launched. I'm not the guy that turns $350 into $1 million in some shitcoin. And I don't care. That's the most important thing. You have to treat yourself with respect. I don't care. I see other people do it, and maybe I could do it, but I'm not buying some stupid shitcoin. I'm not buying something that I can't tell a story about. How the hell am I going to tell? I have to be able to tell dinner table investing. I've told you guys about that. So, and that's okay. Be you. Find yourself. Define yourself. It's the most important thing we do, and it's not just investing. That's just a good way to be a human. Define your rules, define your limits, define what you're looking for. What do you want to do? What's your goals? It's not just more money. More money means you haven't found shit yet, because that's not a goal. And that's why most people lose, because I want more money. No, what do you want? You can only buy so many damn Xboxes and PlayStations. Anyway, D5 Futures Cap, can you please have a look at ETH? Discord Premium now. I paraphrased what you wrote. Look at the price action, minus 6.24%, minus 1.28% ETH denominated in Bitcoin. Chart looks lovely. Chart is an expression of support at a previous significant resistance from a weekly perspective. That was a full-on bearish engulfing, more or less. Basically, that's a bearish engulfing. Come on. Someone's going to argue with me that's not a bearish engulfing. Oh, fuck, I'm not going to argue with that. But I'll call that a bearish engulfing. And that's a breach to the upside. So it's a breakout, retest, and this is a weekly perspective. So for the sake of, oh, look at that. For the sake of granularity, we'll inspect on a lower time frame. Look at that, look at that, look at that. So breakout, previous resistance right here, flip support. Nice to see, comforting. And time weighted average price on the daily is expressing support thus far. So there's good indication, at least early indication, suggesting continuation to the upside. So from a daily perspective, this is the discount. The discount was down here at 2100. Is it much of a discount buying at 2100 versus 2200? Depends on your position size, but I mean, if you're talking about a couple $1,000s, you're going to waste more on gas fees. It's very, very hard. There's much more opportunity the larger the portfolio, and you cannot trade with the smaller portfolio. And if even on like roll-ups, L2s, Arbitrum, Optimism, you shouldn't be trading necessarily on chain. For that, you want like perp exchanges and signatures, and IntentX and stuff like that, GMX, whatever the hell's going on in Optimism, and even Solana, like Pepper. A whole lot of shit going on in Solana. Now, I don't talk much about Solana because it's relatively small liquidity environment, and there's plenty of outsized returns to be made in the Solana environment. You could do a lot of transactions because it's basically free, fractions of pennies. So that's pretty cool. So you could gain exposure to credit markets and the capacity to collateralize and the capacity just to use DEXs and get a feel for clicking buttons. Now, this is probably a great environment to explore given its recent activity. It's got a lot of volume, so you're not engaging in something or things that are necessarily illiquid. So you have a reduced risk profile in that regard. So it's a good place to experiment, a good playground. Maybe even more favorable than Arbitrum and Optimism. So that's something that's encouraging. But from a systemic and infrastructure, structural perspective, I don't need that kind of exposure to those small caps. There's a lot of money made on the airdrop. So if you're playing around, you could maybe that opportunity is passed. Maybe it's not, but it just those airdrops were wild. But that's cool. High opinion of folks that have been able to capitalize on those kinds of opportunities. They were early, and it's not like they were buying assets. Maybe they were just playing around on the protocol, and that's why they got such an airdrop. So you didn't even need to gamble on low liquidity new assets. You just were literally playing around with protocols. So that's cool. My exposure to Solana remains Hero Network, and which gives me exposure to everything in Solana. It's just everything. I'm literally looking forward to Pepper Dex. That looks crazy from a Solana perspective. Perp exchange, Solana speed. Oh my. And there's the revenue. So it's hard because it's a speculative revenue. It's not producing significant revenue or any meaningful revenue at all right now. So it's all speculative. But Solana is still a microcosm of what the crypto space is. There's relatively zero capital on Solana. It's like 2% of everything. And you know that from looking at DeFi Llama stablecoins. Let's take a peek. $66 billion, $330 million on Ethereum. Less than two. Yep, 1.68 billion. But look at that change in volume. You guys know, the folks that have been around here. Oh, look at that delta in volume. Remarkable. Now look at that change in liquidity. No wonder you got all this bullish activity. Look at that. 10% change in liquidity. And that's what it causes on Solana. You know what that does on mainnet? Woo! We see a 10% change in liquidity on mainnet, and you got some crazy price action, crazy volatility, crazy appreciation. So that's exciting. But just remember, everything's at a premium. That capital flow comes out just as quick as it goes in. And that's when everything depreciates. As when you deviate to the mean, to the upside, you're going to regress to the downside, and it balances itself out. You deviate to the upside. Here, look. If you look on Ethereum on a 3-month, you can see what I mean. So look, you deviate to the upside. Look at the delta from the line to the upside, and then you overshoot to the downside, and then you overshoot to the upside, and you overshoot to the downside, and you overshoot to the upside. It's the whole point. That's why the average price is going up. It's right down the middle of all the deviations to the upside and the downside. So what happens when some shit on Solana goes up 10,000%? You have a lot of profits taken, and it's going to overshoot to the downside. So it will drive most folks mad unless you know those expectations, because those expectations, that's what's going to happen. It's just fundamental natural law. Hope that helps. DeFi Futurist, I hit on Ethereum. Everything's at a premium right now. I mean, the discount was in last year in April. That was the discount. I mean, he did have a discount last month. Last quarter, last couple months. If you bought the last 2-3 months, you got a decent discount. You need to buy below time weighted average price. 1,500 to 1,800 was a good price. And that way, when Ethereum runs up to 2,600 and then crashes to 2,100, you're like, all right, cool. I bought at a lower price, and structurally, it looks like it's going to continue to go up. A resistance will flip support, and then you'll have, the higher high for the trifecta of bullish confluence. And that's the way these markets work. That's the way directionality works. That's the way confluence works. This thing's early. I think this thing runs exactly where everyone says it's going to run. It's going to run to 1,000. And then guess what? You get a 10x. You're going to get a 10x. You're buying someone's 7x. Someone is making 700% profit because you're taking a position trying to get the same 700% profit, give or take, for the point I'm trying to make. You're going to pay someone 10 times on the money just to get the same gain that they did, and it is much more volatile to buy it in the second 7x from 70 to 700 would be a 10x. That second 10x is going to come down much faster than the first 10x. In fact, the first 10x didn't even come down that much. Almost a mean regression. Let's go to the monthly. See, you didn't even have a mean regression to the average price. Solana could regress all the way to $27. And it'd be like, all right, it's a good price. It's the fair value for the asset, the average value. Significantly deviated from the mean. Not at a discount. A bad price. Well, it's not a bad price to buy if the expectation is, 1,000. It's just that you didn't buy a discount. And if you set the rule for yourself to buy the damn discounts, then more likely than not, the price will go higher than where you bought it from, rather than having to sit through periods of depreciation, such as 2,100 days after, great financial crisis, to get back to where it was, to get back to the high. Now, if you do that from a Bitcoin perspective, it took you date range. It took you 1,096 days. Now, it's not a decade, but it's 1,096 days to get from the peak in 2017 to the price it was in 2017, but it had to reattain it in 2020. 1,096 days. So why do that? Just buy it at a discount. It sounds so simple. The problem is you want to own shit, so you gotta wait. That's what Buffett, and why he's so patient and just strong-handed and knows you're gonna be able to buy some shit at a discount. And those are the things to buy. You buy when things are at fire sale prices, when they're completely mispriced, and that's a good opportunity. Hope that helps everybody. All right, let's wrap it up for today. Any more questions? Thank you all for joining. DeFi Futurist, thank you, Cap. That's great. How can we know when it's a discount? Check the 3-month time weighted average price and the 6-month time weighted average price. You're going to see very little deviation to the downside on a 6-month time weighted average price just because of the way sovereigns have cornered themselves with debt refinancing requirements. Now, it is getting complicated at the geopolitical level. It's not necessarily from a conflict level, but that could get complicated really quick. But it's been calm the last couple of weeks and month or two maybe. It's clearly pretty shitty over there in the Middle East and so on and so forth. But it certainly could get complicated quick with regard to Japan. But this time weighted average price is an interesting discount. Now, you're not going to have this kind of time weighted average price for a lot of DeFi. Well, you don't have anything on Curve for a 3-month time weighted average price. It's too new. Came out in 2020. You only have a couple years worth of data. And then you're taking more risk going into a shorter term time weighted average price. Hasn't even broken to the upside. This is still at a discount relative to the monthly time weighted average price. But clearly, it's up 100%, give or take. So, food for thought. Certainly still at a discount relative to the time weighted average price. It's not much of a discount because it literally is at the time weighted average price at 72 cents. But when you deviate to the upside and you break above the TWAP, then the mean regresses, and then it's so new that the damn TWAP is just going down. There's no history with the TWAP going up. Look at that. I like that. Dot broke above the time weighted average price. That was a significant deviation to the downside, but it was a breakout, a retest, and it's up significantly relative to its average price on the monthly. So I like that one. Cosmos, Atom, still at a discount. Now, the beauty of the Cosmos hubs, which is TIA, that's like the hot name going around right now. It all benefits this. This is the nexus point of all the Cosmos hubs. All of them. So, and it's off people's radar because everyone's like, TIA. All right, great. I don't want to buy some shit that's up. I don't want to buy someone else's 10x. I want to buy something that no one's looking at. And there's plenty of that because most people don't. Most people respond to price action and they buy things that are up, and that's the last thing you should buy. It already moved. Hope that helps. Tapsy, welcome. Last couple minutes, wrapping it up. Monday, December 11th at 12:33 p.m. I appreciate everyone that joined me today. Tell everyone to subscribe. Link in the description for the most rational community in the entire crypto space. I appreciate everyone in there very much, especially those who survived the bear market. 41 people made it to the end of the stream. 14 likes. Smack that thumbs up button. I appreciate it. I will see you guys later this week. Peace.